Well, the federal government has announced plans for a Eurobond issuance at the international capital market to raise $6.2 billion to finance the 2021 budget. The Debt Management Office, DMO, says virtual meetings with local and foreign investors are holding for 2 days. It says this is the first time local investors will be included in the global market. The DMO explains that the issuance of Eurobonds will benefit Nigeria in various ways, including leading to an increase in external reserves and freeing up space in the domestic market for the private sector and subnational borrowers.
All right, joining us now to discuss all these economic issues is Paul Alaje, an economist and senior partner at SPM Professionals. Thank you so much for joining us. Let's begin with this Eurobond that Nigeria is putting out, $6.2 billion, at least $3 billion. That's what it's going for. The question that people like me are asking, we've done this a couple of times. Has it benefited Nigeria in any way? What are those things that you look at and say, yes, Eurobonds are the way to go?
Well,
and can Nigeria achieve $3 billion at least this time around?
Well, it depends on rates. If Nigeria is the higher the rate, the more investors the country will attract. The last time Nigeria raised bond, Eurobond particularly, our rate was quite high, so we attracted more investors. That is not without its challenges. One of the concerns that comes with that is that you have to service your loan in hard currency. So when you see the report for 2020 saying Nigeria spent approximately 54 or 56% of revenue to service debt, it's not far from the truth.
Some figures say 98%.
Yes, that's when you compare half a year, particularly during the lockdown, when there was no economic activity happening and government has no means of generating revenue. But after that, when we start generating some revenues for federal government alone, and when you had maybe some state that are also borrowers to it, it went down, but it's still more than the threshold of 30% of debt to revenue. So we're already having huge challenges with debt to revenue. And when you debt service, I beg your pardon, not payment of debt, debt service to revenue. And when you ask me, why is that important? Why it is important is because the opportunity cost of revenue for debt service is what would have used the money to do, to construct roads, to build more rails, and for some recurrent expenditure, if you like. So because we are going back to the market, mark you, when you hear Eurobond, as attractive as it appears, we have to be very, very cautious. And I will tell you why. Unlike the rebate President Obasanjo got when he was the president, going to international committee for bilateral loan and all of those, that can never happen with Eurobond. And why? Because it's a commercial loan. So it's like selling treasury bill and bonds in Nigeria, quote and unquote. So how do you now find those and tell individuals to forgive you of debt? So debt forgiveness by raising Eurobond is a huge concern. Now, to go back to your question, yes, what have we used it to do? Well, the Budget Office and the Ministry of Finance has reported that some of this money we've borrowed have been used to finance capital expenditure. Besides, money we have not generated yet in crude oil, and we're still expecting funds to come. They've been used to fill the gap, you know. So, but I strongly believe we will not just go borrow money without having things to do with the monies we are borrowing. So I want to also think government will have reasons. But the biggest challenge, beyond all of the things we want to use all of these monies for, is exchange rate risk. The money we borrowed in 2018, what was exchange rate at official window? Don't let us talk about what parallel market is saying. At official window, it was about 360. I mean, it was about 306. Today, it has increased. As at February 27 to 28th, Central Bank of Nigeria, because of what happens to what do we call it now? What happens to the foreign? I mean, our foreign reserve. We decided, government decided, central bank decided to emaciate the value of naira. That's to devalue naira. Yes. Because of that singular decision, 1 trillion naira, 1 trillion added to our debt profile for borrowing no monies. Because when you want to pay, and these are not my figures, I'm called according to Debt Management Office. I did not put the figures together. So that's what Debt Management Office said. So as much as Debt Management Office has no option, he has to report it. Central Bank also has no option. The bank has to report it. Right. What we now need to look at is how do we free ourselves from the shackles of borrowing, or how do we generate more revenue? So that at the end of the day, we'll not be carrying this burden.
Good. The DMO said I'm interested in this for you to explain it. When the DMO says Nigeria has a sovereign yields curve in the international capital market that extends up to 30 years, what does that mean?
Well, when you look at the capacity that we have as a country, we have that capacity to still go to foreign market to borrow money, and it can extend for a long time. Unlike when you borrow treasury bill and bond locally, and in 6 months, 1 year, you're expected to pay back. But when you go to international market, it is relatively longer. You don't borrow for a short period of time, you know. So the window is and the rates are also very low. But the major challenge we have is exchange rate risk. This naira is not stable. It's not stable because we have a lot of people that are speculating, if you ask me, speculating against the naira and bringing down the soul of the currency.
And, you know, still talking about this, of course, we need to look at the MPC rates. They have remained the same. Anyway, one of the reasons being given for the Eurobonds is that it will increase Nigeria's external reserves. Bear that in mind. But let's talk about this MPC rates and the fact that the CBN is going after illegal forex operators to stop them from frustrating the CBN's efforts at stabilizing the naira. Is that an indictment that the policies that the CBN has put in place so far have really not you know, achieved the objective of stabilizing the naira?
Okay, so I'll start with foreign reserve. Now, what is foreign reserve? I've seen a lot of Nigeria ask me at meetings, conferences, and presentations that, oh, we have so much, something billions of dollars. Why can't we just use that money? It is not money you can access. It only shows your capacity to respond to foreign demand. So when you borrow money and it comes in hard currency, the first place it goes is recorded in your foreign reserve. So you now use naira that we have to finance local projects. Meanwhile, the currency will be deposited in our foreign reserve. So foreign reserve will automatically go up. So what DMO was saying is actually very correct. So it's going to boost our foreign reserve each time we borrow. So that's one of the reasons why it is good to borrow from foreign market. However, exchange rate risk. That's what Nigeria has not been able to settle. Now, going back to CBN's decision to retain rates, there is nothing the Monetary Policy Committee would have done, because when you look at inflation, inflation is still increasing at a reducing rate. People said inflation is falling. That will not be very correct, technically correct.
At 17.01?
Yes, it is increasing. It means it's a positive figure, so it increased. When you compare it to what the figure was, it increased by 17. Now, when you say inflation is falling, it's very important we let people know what it truly means. When you compare 2020 to 2019, the figure, and you compare what happened between that year to 2020 and 2021, it is so very clear that the figure increased, but at a reducing rate. So
can we stabilize the naira?
We will leave it there. I wish I still had time, because there were questions on Eurobond and illegal operators, but we don't have time. That's all the time we have for this. Paul Alaje, an economist, senior partner at SPM Professionals. Thank you
for
being
much
on the program.